everyone, Sanjeev here. In this episode, we are gonna discuss about investing in property using your super. Recently, a lot of our clients have been buying properties under their self-managed super fund using their super money, and I thought it would be great to share what is involved in buying a property under self-managed super fund for others to learn and understand about this topic. Now, to discuss this topic in detail, I have our regular speaker, Amit Aggarwal, who is a property, tax, and financial strategist, and he has helped multiple clients purchase properties under self-managed fund. So, let's get into this episode. Welcome, Amit. How are you?
Good, thanks, Sanjeev. How are you?
Good, good. Good to see you again. Now, really excited about this topic, Amit, because a lot of, in fact, our clients also ask about, there's always so many questions coming. There's a lot of things to digest, bit of a process when you're buying under self-managed fund. So I'm sure this episode will help a lot of investors looking to buy under their self-managed fund or even considering to buy under their self-managed fund. So yeah.
Yeah, for sure. It's interesting topic. As a disclaimer, should not be taken as financial advice. Really need to speak to your financial planners to make sure your personal individual circumstances are taken into account before you decide whether you have set up as whether you should set up self-managed super fund or not. We are making an assumption you are already down that path where are you have done a self-managed super fund and you're looking to buy the property in it. That's where this discussion is leading to.
Okay. So should we start like just Amit, I'm gonna ask question like say how is first of all self-managed super fund different than your retail super fund because everyone has got their super account,
Yeah.
but how it is different?
So with the retail fund, your employer puts contribution and someone take care of that money and you get return and you get a report at the end of the year. It shows how much growth your money has um, had over a period of time. With self-managed super fund, the money sits under your control. You have to make decisions with regard to investments, and you run the show basically. No one else does. If you don't invest that money, it's sitting in a bank account doing nothing.
Fair enough. Okay. So pretty much now other than like so now you are the manager of your fund, something like that,
You
right?
take control of your super money, and it's interesting. Lot of people don't recognize super as their own money. They think it's something they will get control over when they retire. But the fact is, how it is invested and how you manage this journey will determine what happens at the time of retirement. So if you're not taking interest in that money, then it's a lot of money sitting there under someone else's control without you having any influence whatsoever what's happening with it. There have been instances when I've asked their clients, do you have your super fund details? A lot of them don't even know the name of the super fund. Some do. And those who know, they don't know the login of their super fund. They don't know what is the balance. It's something like forgotten because they don't see the money going in there. They don't care for it. Care factor is pretty low for a lot of people in that sense.
Yeah, no, I agree, and that should not be the case because I work with a lot of our clients and we say, I mean, super money, whether it's 10 grand or 100 or 500K, it's your money, right?
Absolutely.
It's not your neighbor money, it's not
Yeah.
your friend money, it's your money. And you should be monitoring that money and doing the best what you do if that money is sitting in your personal account. So,
Absolutely.
so I think it's you're right. I think you because a lot of people forget about that. Oh, how much I have, I
Mm,
need to log in and see um,
yeah.
and now, Amit, like, why, why property in self-managed fund now? Like,
Yeah. I think, again, property and self-managed super fund, it's complex. A lot of people don't even understand that can be done. A lot of people don't even know that can be done or not. property is one of the biggest asset classes in our country, and a lot of people choose to um, use their super money to buy investment property. Uh, One of the fundamental reasons is it gives leverage. So if you have $200,000 in your super fund, for argument's sake, your property, you buy a property worth $600,000. Now, all of a sudden, $600,000 is working for you instead of $200,000. A lot of people consider that as a good way to use their super fund and buy a property in self-managed super fund for that reason.
Yeah. Okay. So the biggest is the leverage, and then maybe the control of your money rather than.
Correct. Of course, the control is there. You make that decision. Again, uh, with the control comes responsibility as well. You got to understand the responsibilities and rules and what you need to do. It is not your normal standard investment purchase. There is a lot more involved in self-managed super fund from administration perspective and setup perspective. And you need to be aware and be across all those things before you actually make any judgment, any decision about doing anything in super fund, self-managed super fund.
I agree. I mean, so it's like it's not for someone I can see like who just love signing one piece of paper and no, not understanding. It's not a simple tax return like POIG or something. It's there's some paperwork involved, yeah, a bit
There's
of
this
understanding.
there's massive documentation involved. In fact, I was having a conversation with somebody who's looking to buy property in SMSF a couple of days ago. I said, forget about everything you know about buying a property, the process wise, because what you know it is not even one third of what you would end up doing uh, when you're buying property in self-managed super fund. So just be ready for unknown territory because it's extensive. So when you do self-managed super fund, there's a special purpose corporate trustee, there's self-managed super fund deed, there's investment strategies, there's bank accounts to be opened, there is rollovers to be a rollover to be happening. All of that sits with you, and all those documents uh, has to align to make sure that what you want to do is allowed by SMSF deed, corporate trustee, and your investment strategy. They all are in sync. You
So,
know,
Amit, I think you talked about a lot of trustees and corporation and everything. Now, before we get into that, right? Like how to the kind of process when you're buying a property under your self-managed fund, which I'm keen to listen. But can we quickly talk about like someone who's like, hey, okay, I've got my super retail super fund. Now I want to set up my self-managed super fund, but what is the process? So you want to talk highly about like if someone needs to set up what it takes, where do they go, whom they need to talk to.
again, the first step of the process would be to understand whether you should do it or not. That's where you need to talk to a financial planner and get that understanding right. If they go, if you after that, after the discussion, if you understand that you want to go ahead, your financial planner typically would set it up, or your accountant can do it. Now, there are clients in our portfolio who know what they want to do, and they have just gone ahead and said, "We want to set it up. We understand what we are doing, and we don't need the financial planner to tell us." Right? In those circumstances, they can get their accountant to help them out directly to set it up. Uh, Setup process is again quite extensive. It needs careful consideration. The corporate trustee for self-managed super fund has to be a special purpose company in line with CIS legislation. The SMSF trust deed has to be drafted properly to make sure your trustee, your SMSF deed, and then subsequently your investment strategy are in line to make sure everything is connected and you can actually execute the strategy you want to execute.
But I mean that setup process, like once they have gone to the accountant, or
Yep.
like say financial planner has given the advice, like you
Yep.
can go ahead and set it up, then they will mostly the accountant will take care part of that setup
Yep.
process. Is that right?
Yep. Yeah, he can definitely he can.
Okay.
Uh,
So
so the
once the setup is done, yeah, sorry.
so the setup part of the process would be they will need to give them corporate trustee name, their personal details, place of birth, date of birth, all of that, and then the accountant will set it up, get the documents executed. You need to go to a bank, open a bank account. The Depending on which super fund you are in, you need to reach out to them. They will get the forms and get the rollover happening. So the once the money is within SMSF environment, that's the time uh, to get the foot on accelerator when it comes to understanding the uh, investment demographics at that particular point in time.
Sure. So when you say open the bank account, so this bank account we are opening for the self-managed super fund, right?
Correct.
The
Correct.
structure which has been set up.
Correct.
Okay. And then when you say rollover, so this is the rollover of what?
So the funds right now are sitting in your industry super fund. You need to bring those funds into your self-managed super fund and then buy the investment property with that money.
Okay. Okay. And then of course the lending and all those banks will look into their how much funds you have and what kind of property you're looking for,
Yeah.
and then they will give you the borrowing whatever it is, right? Which I
Uh-huh.
think again we're
Uh-huh.
gonna talk
Mm.
about it.
Yeah.
Okay, so once you have done open the bank account, do the rollover, and then what happens? Then you go talk to your mortgage broker, or how it works. Like now I need to buy a property. What is the next step?
Yeah. So at any given point in time, if somebody says, I want to buy property in self-managed super fund, first thing we do is look at their A, understand what they're looking to buy. B, understand based on what they're looking to buy, how much they can borrow. That high level understanding should be developed from the very first minute, the the moment you want to go down the path of buying a property in self-managed super fund. You know, One thing I must say is up to rollover can take up to good 2 months as well at times. So you need to allow enough time to make sure that you don't sign the contract the moment you think about buying a property in self-managed super fund. You need to make sure the funds are ready in self-managed super fund for the transaction to be executed.
And Amit, when you say it can take up to 2 months, why is that such a lengthy
So
process?
you got to understand that if there is an accountant involved, then there is solicitors are involved for drafting the SMSF deeds, all of those things. Then bank account has to open. Once the documents are executed, you need to provide that to bank. Bank might take a week or 10 days to open the bank account, and from there, you need to some prepare the documentation for your industry super fund to release the money. They have varying requirements as to what is required from their perspective before they release the money. Because of more recently, there has been a lot of fraudulent transactions where people have lost their super fund money. The regular industry super funds are very cautious in making sure that they validate people are credible before they actually release the funds. So they are extra cautious in that sense, and that can take 2, 3, 4 weeks before the money hits your super fund SMSF account.
Okay, okay, makes sense. And of course, up to 2 months, but I think yeah, if can move fast, do it maybe
Excellent.
less time, but
Yeah,
but
yeah. Just it's just a time frame I'm saying, suggesting you should be aware of. It can happen in. We have done it in 2, 3 weeks as well, depending on how quickly you can move and how quickly everything flows through. You know,
yeah.
there are a lot of touch points, and if things doesn't flow at every touch point, then it becomes a challenge. But if you are addressing the challenges as they come along quickly, then uh, um, 1 to 2 months is more than enough to get it sorted.
Yeah, sometimes like rollover is not in your control, right? Your
Correct.
retail fund, these people can take time, ask for ID or whatever. Now, Amit, like roughly cost wise, what one would expect, depending on, I know, depending on who you talk to and all.
Look, we suggest allow. for the self-managed super fund and the bear trust, which we will talk about in a bit, 5 to 6 grand in that ballpark figure, on a very high level. Now, this funds should come from SMSF technically, and that's how it works typically.
Okay. Okay. So yeah. So again, someone's listening. There's some investment, upfront investment is there, 5 or 6 grand to set it up and make it ready, and then including the bear trust, which we're gonna talk about. So now it is set up. I think you already highlighted that whatever you're gonna buy, that advice or your planning is already was in the first place, right? So so now what happens? Like now, someone need to go to their mortgage broker and and um,
Yeah.
and
So
get the pre-approval, or how it works.
so at this point in time, so look again, I don't typically big fan of pre-approvals in that sense. The reason is with self-managed super fund, you need to look at whether you are buying commercial or residential. Um, Different lenders have different appetite based on the kind of property, whether it's commercial or residential. Then within residential, again within properties, there is subclass of properties. For argument's sake, with residential apartments, same lender can have different appetite in same suburb compared to fully detached home. And you need to understand that upfront. What are you looking to buy? And then work with your broker to make sure that he's aware of it, and then he aligns the right lenders for you upfront. Now, lenders are changing their policies quite quickly, getting a pre-approval from one, and then 60, 90 days down the track, there is a possibility that lender may have changed its policy for a particular asset class, or their risk profile for that suburb has changed. Uh, that could be a problem for you. So that's why uh, we recommend our clients to stay in constant touch with us throughout the process. You know, make sure that you keep on updating us with if there is a change in your plan. Definitely, you need to get in touch with your mortgage broker and let them know that this is the plan now. This is what we are looking to do. And when you're getting quite close to closing down a transaction, you need to definitely be in sync. Your mortgage broker should be in sync with you, making sure that that suburb, that property class, um, uh, he has at least two or three lenders. We look at minimum two, three lenders to make sure that just in case one lender doesn't work, then there is a second and third alternative available. Typically, first one we vet it out very carefully, make sure the first one is the right one. For whatever reason, if that hasn't happened, then the second one should be there. I haven't seen going to the third one. There is odd occasion once in a year that will happen where we may have to go to second lender, but that is extremely rare.
And what sort of lenders are in this environment? Like, can we go to the big four or?
Yeah. So Big Four pulled out of this environment a few years ago, and they haven't indicated they are coming back into this space. Typically, there are smaller lenders who play in this space. Like we deal with Better Choice, First Mac, Latrobe, Liberty, Think Tank. Those are the lenders, Bluestone. They are the ones who operate in this space and provide lending to this particular section. Now, I guess typically these lenders would offer interest rate right now. It's sitting around 6 to 7.5%, depending on your loan to value ratio and the asset class. They will give you 60% to 80%. That is a typical range, and the interest rates would be 6 to 7.5. Again, depending on the risk appetite of each lender.
Yeah, and again, I think the rate of interest you're talking about in the current environment, of course, this one we're recording it, in March 2023. So in this environment where the rate of interest are higher, and
Mm.
yeah.
Yeah. Just to add, with the SMSF, whilst the interest rates are what they are, and loan to value ratios are what it is, there's typically we realize there is 2 to 4 grand of costs associated with borrowing, upfront costs. So you need to be aware of those as well.
So is it application fee, Amit? Like when you're taking the borrowing loan?
Yeah, so there could be application fee, property valuation fee, legal costs, because with SMSF lending, the lenders has to appoint a third party legal people, which we will discuss in a bit, and the paperwork that is quite extensive that they need to prepare.
Okay. Oh, fair enough. I think, yeah, so that's another thing, right? Like, because if you're buying under a name or other thing, generally these fees are very
Not there.
minimal, not there, right? But here, I think there's some application fee, then they can charge the solicitor fee, even the bank valuation fee.
Yeah,
So I think, yeah, it's good to know upfront that,
yeah,
hey, these are the costs coming up.
yeah, absolutely.
Um, so,
So
no, thanks, Amit.
we do look at 3 grand as a ballpark figure. There could be something less, bit more, but that's the guideline we look at, we run with.
Yeah, I think I bought my property. Me and my wife, we bought it last year, and it was around, I think, yeah, 1.5 grand. I think, of course, you did the lending for us, but I think, yeah,
It was a bit more. It was a bit more.
okay, it was a bit more. Okay,
Yes, it was a bit.
okay. So yeah, I think maybe
Yeah, yeah,
so not bad. I think again, depending on the
yeah,
purchase price and few things,
exactly.
it can vary, right? So okay, now in when we're buying, like, if someone say, "Can I live in this property after buying in self-managed fund?" Is it allowed?
No, absolutely
No.
not. The core purpose of self and or industry or any super fund for that reason is build your nest egg for retirement. Any action that you do um, that is not in line with that sole purpose test, most likely you are breaching the CIS legislation. I've had all sorts of questions. I want to buy shares. Can I buy a computer from SMSF? Nope, you can't. Can I buy a car to go and check my properties? No, you can't do that. That's not allowed. It's not it is not directly in line with your, it's not in sync with you growing your super fund for retirement. That is not direct purpose. So any dollar spent is not right without that intention.
Yeah, sure, Amit. I think, no, I know there's a lot of complexity and a lot of things to be discussed. It's a lot of things you can't do, you can do. So I think, again, better to talk to someone like yourself or no experts who do this every day, and then move forward on this one, right? Now, going back into, like, the ones, you have checked the borrowing, everything there. Now, what is the minimum sort of fund one needs to start looking for a property? Do we have any minimum requirements there, or?
So there is no minimum requirement. I know there has been a lot of media attention on minimum SMSF balance. As such, there is a recommendation. There was a recommendation, I would suggest. I'll share a link with you where that recommendation was removed more recently as well. What they were saying is based on um, you know, based on the balance and the costs associated, which is just what we discussed before, it's the costs outweigh the benefits if the balance is lower. Now, that uh, if you are buying a property, if you have got a specific strategy you're working towards, then there's no such thing as minimum balance as such. Of course, you got to have minimum balance if you are buying a property with the 80% you can borrow and 20% is coming from the super fund. Super fund has to have that 20% plus the stamp duty plus additional buffer to meet its obligations. That money has to be there in super fund. As long as you have that, um, you're fine. We bought a property for a client who had $120,000 in super fund balance, but he came with a very specific strategy, wanted to buy a property at a particular location, um, and he knew exactly what he was doing. So we did the servicing, we worked out the numbers, we looked at the lender with the minimum liquidity they require. The numbers worked out, and he bought the property. So the balance was like 120, like I said to you.
Yeah, we bought a property. I think it was 350 or 360K
Yeah,
purchase price. So that does all the tests, right? Like 20% deposit is stamp duty, some buyer agent cost, and then it's
yeah,
still some leftover of 5%
correct,
as a buffer.
correct.
We bought personally our property. We had 150K, and we bought a property. Purchase price was 505, 500,000, right?
Yeah,
$5,000. So we bought it again, 10-20% deposit, stamp
yeah.
duty, other costs, and some buffer left over. So okay. Um, Now, what are the other things people need to consider while buying a property under a self-managed fund?
I think it's good to understand the servicing, how servicing works in that sense. So typically, if you are an employee, your employer contribution. So if you are on $100,000 salary, 10.5% of that goes into your super. That money plus the expected rental return from the property, plus if there could be surplus money, investments from that surplus money, that will be used to assess the servicing within self-managed super fund environment. You got to understand the servicing in self-managed super fund has nothing to do with your personal assets. They are two standalone, mutually exclusive entities. Uh, the servicing within super fund is purely your contributions, your employer contributions, rental return, plus any other investment. Now, for a PAYG person, it's as simple as that. What is their current salary? 10.5% of that works out to be uh, uh, the figure the banks will use typically to assess the servicing. Of course, there could be uh, circumstance where that may not be applicable, but in general, that is the principle.
And when we're buying a property under a self-managed fund, say, we bought the property, say 500K property, and, did it. Now, if I go and buy another property on my personal name or anything, does it impact my borrowing because I have bought a property under self-managed fund?
No, it doesn't. Self-managed super, like I said before, self-managed super fund is mutually exclusive entity from you as an individual or you buying property in your trust or whatever. Yes, banks do ask the question because it will hit your credit file. You as a guarantor for that loan, banks do ask for that. They do ask that question, what is this all about? And once they get satisfactory answer, which typically is a letter from your accountant, uh, that this was or even broker notes sometimes does the job because the broker has done the loan. They will get that clarification from accountant slash broker and move on with it.
Sure. Now, I think you spoke about Bear Trust, Amit. What is that Bear Trust?
Yeah. Now, this is the next layer of complexity when you're talking about buying a property in self-managed super fund. Now, within self-managed super fund environment, there is something called limited recourse borrowing arrangement. What that means is the recourse for the lender is limited to that property only. What what it actually means? Let us say your super fund has $500,000 cash sitting in it, right? You use $200,000 to buy a property. Now, for whatever reason, that property, and you have $300,000 loan against it. Yeah. Now, that property, for whatever reason, disappeared from the face of earth. Lenders cannot go to super fund and say, you have that $300,000 in your savings, give us that money so we can recover our uh, loan, that our debt we gave you against that property which has disappeared. Our property is not going to disappear. I'm just hypothetically saying for that reason, for the discussion sake. The banks cannot go back and take whatever funds are there in super fund. Hence, their recourse to that loan is limited to that property.
But we are also becoming the guarantor, right?
Yeah. So that I was going to cover that. So to hold that property, there is some, you have to create a standalone structure uh, that will that will be holding the property on behalf of the super fund until there is a loan. So that structure, whatever is within that structure, the banks can take it to start with. Uh, Plus, they take guarantee from the directors of the super fund. They can tap into their personal funds, which is a separate discussion, but they can go down that path if they need to recover their monies. But they cannot go into the rest of the super fund investments to recoup their money.
And has there been any logic behind it, like why it was done? I know it's maybe out of the discussion, the scope of this discussion, right? But
I think it's more so to protect the super fund nest egg from unforeseeable circumstances where something has gone wrong really badly, and the government is trying to save people from losing everything and anything in that sense. Because
what else, Amit? Like, so now, so Bear Trust is when it is set up, like when you have got a property, or you can.
so that is again a technical process, right? So you need to initiate the process, make sure you work. So this is where it keeps on adding layer after layer after layer. Your accountant, your broker, your solicitors have to be in sync with each other, making sure that the transaction goes as smoothly as possible. Now, when you buy a property in self-managed super fund, you need to set up a Bear Trust. Now, Bear Trust has to have property address when it's set up. Now, you can't have property address unless you have signed the contract. You can't sign the contract unless the Bear Trust is set up, right? So you need to work, your accountant, your broker, and your solicitor has to work hand in hand. And the other aspect of it is, every state has its own policy of naming convention as to what goes on the property contract. So you need to make sure you pick the right team and make sure that they understand what they're doing. It can have stamp duty ramifications now and down the track when you're looking to transfer the property across from Bear Trust to the self-managed super fund, which obviously happens once it's paid off, fully paid off.
Yeah, I agree. Again, see, like people who are listening, it might feel like, hey, looks like it's especially for the people who are looking to buy a property under self-managed fund, or considering this path, right? It might looks like a lot of work. But again, yes, there is a lot of work, definitely. But again, if you have the right team, they do it. You're not
Yeah,
doing it.
yeah, yeah.
You're just getting the right advice. You're signing on the dotted lines wherever it is, right? So it's not that a daunting process, even though it is not for a fainted person who says, oh, I'll wake up, I like the property, I sign the contract today, and then figure out the solicitor and the mortgage broker. It's
It's a recipe for disaster. It's a recipe for disaster. Uh, yeah, now you need to build your team up front. You need to know who you're working with, your buyer's agent, your mortgage broker, your accountant, your solicitors. You got to have a foolproof team so you can rely on them when the time comes. You don't go out and find those people after you have found the property. If you treat those people as just another option, you are gonna be just another option for them as well. So if somebody's gonna say to me, is walking through the door to me right now and saying, I've bought a $500,000 property in self-managed super fund, can you get me a loan, as compared to somebody who's been working with me on strategy, and I'm aware of their circumstance. If he's going to come and say the same thing, I'm more likely going to first attend to my existing client and make sure his deal is done properly, as compared to somebody who's walked in, um, have no idea, no concept, whatever. Uh, you don't you don't do those things, particularly with self-managed super fund. It's extremely complex, and you got to align your ducks before you actually do anything. You can't just walk in and buy property.
Now, this is like going for a surgery, right? You don't wake up one day and go for the surgery. I mean, you've gone through the consultation, you have planned everything, you've got the specialist advice and everything done there, right? And
Yep.
then you have planned for a day and you're going for the surgery. So it's like that. Um, Now, Amit, like say now someone has got the bid trust, they bought the property, signed the contract, then what happens? Like is the finance process is lengthier in this scenario?
Yep.
How much the lender will take? What is your I mean, what do you have to say on the settlement timelines?
So typically, when it comes to timelines, we request or suggest 3 to 4 weeks of finance clause, particularly with self-managed super funds. Why? I'll tell you. When we set up, or when the super SMSF is set up, there is corporate trustee um, with the SMSF deed. There is bare trust with corporate trustee and SMSF deed. There is you as an individual as a buyer. There could be your partner and or other family members as well involved in this. Now, the bank's process before they actually start assessing the application is to KYC every entity, go through the documents. Their legal team would review the documents, make sure that you are actually allowed to do that transaction. Your legal documentation allows you to actually buy that property, right? So that KYC can take week to 2 weeks process in its own rights, just that, you know. So once you have signed the contract, obviously you and your broker are deeply entrenched to make this transaction happen. Uh, at that, why before you have signed the contract, I as a broker would know exactly where the suburb is. I would know which lender to take it, which lender has the right appetite, right loan to value ratios, what we're trying to achieve, who is my first and second choice, if not third. Typically, we haven't gone to third choices with SMSF. We've been lucky that way. Our vetting process helps us understand that we will only take it to the lender where 99.9% we get it right. So the moment you sign the contract, your broker we are onto it, making sure that everything is ready. We start preparing the application. That takes 3-4 days in its own rights as well.
Hmm.
Right? We can prepare so much upfront, but then the documents gets outdated. So the bank statements has to be within certain time frame. The pay slips has to be within some certain time frame. If you're self-employed, then we need 2 years of history or future commitment to some degree to make sure that servicing works. There's all those small little things that come into play, which you can preempt, but they will only happen when you are closer to the date, when you are actually doing those things. Certification of documentation. You can't have 90 days or 180 days old documents, so it has to happen uh, close to the transaction. All those certifications has to happen. Verification of identity has to happen. Uh, all those documents has to be done, and then submit the application to the lender. We allow 3 to 4 days for that piece to happen, and then from there, it is another week to 10 days, week to 2 weeks for the lender to vet, do the KYC, and then subsequently there is another week to 2 weeks process for the lender to assess the application. Of course, part of our process is to understand also not just the interest rates, loan to value ratios, also keep an eye on which lender is taking how long to process an application. And then again, if you and I have worked on a couple of tight scenarios where timelines were strict, and I've given you heads up a week or 10 days in advance that this may not get through in time. Please get the expectation right from seller's agent's point of view, that we might need another day or two, you know. So getting those things, working with the team closely is very important in that sense, you know. I literally got an approval for SMSF for a mutual client of ours today. We were expecting it not to happen until next week. But knowing the process, understanding that there is a delay, we tried to push it through. We took it to the next level management and said, hey, we have timeline. It's a contractual obligation. We can't just say, to the client that we can't get the loan done in time. So the finance is expiring Tuesday next week. We got the verbal confirmation just came through whilst I'm on this call. Uh, and then obviously the formal documentation will come through in next 24 hours or
No,
so.
I agree with you. I mean, see, it's like it's. I think now, first of all, thanks Amit for sharing in such a detail. Right, it's like a so much I mean, so much documentation, so many checkpoints. Right, so
Oh,
it's a very handheld, like close knit process with the client, with the mortgage broker, buyer agent if there is a buyer agent, so that you need
absolutely.
something, right? But mostly the client, the purchaser, and the mortgage broker to make sure all the documents are provided on time. You are on top of things. Give it to the bank, and then they also have a lengthy process. Like they are reviewing your trust deed, bare trust, everything. So their legal team is going through, and even
Absolutely.
one step of the process get stuck, you lose couple of days.
Easy.
So we that's why we always put 28 days for finance clause. I think we had only one instance we put 21 days, because otherwise we would have lost the deal.
Yeah.
But then we knew that it's worth going through that process, and we
Yeah.
can achieve, and worst case is what will be very close to the finance approval anyways.
Yeah.
But otherwise generally it's 28 days we ask for, and similarly for the settlement also 28 days, so that there's
Yeah.
enough time to once even I think you're going to finish anyways,
Yeah.
regarding once you have got the approval, then what
So
happens.
obviously the assessment happens, the approval comes in. From there, the assessor's job is done. The file goes to the legal representative of the bank, which is typically third party, not internal. So they do another level of vetting of the trust documents, because internal legal review may not be as comprehensive as external legal review would be. So they take another week to 4 5, you know, a week to 10 days to prepare the loan documents and send it to us. Now, the loan documents that they send through are quite extensive and comprehensive. There is a set of documents for self-managed super fund. There's another set of documents for bare trust. There's another set of documents for all the guarantors individually. Now, when you look at the documents that come through, if you haven't done SMSF deal before, it will blow your mind. Whatever you know about borrowing, you have to completely forget that and start all over from scratch, because the extent of documents that you look at is astounding. Um, it takes us 2 to 3 hours to print and organize those documents properly, and then another 2 to 3 hours minimum to go through them with the client and get them to sign it. Right? And part of the process at this point in time is, because you are guaranteeing the loan as an individual, most of the lenders want you to get legal advice, and they will have the loan documents would have their um, documentation, which you need to take it to your legal representative, get them to give you the legal advice, and then certify that we have given them the legal advice. A lot of documents at this point in time has to be certified by a lawyer itself, not just by anyone. So there is that piece in the process as well that has to be done. Once you get the documents, to get that done and to review the documents, so that takes another week in itself. Then it goes back to bank. Typically what we do is, at that point in time, to make sure we have covered everything, we scan the documents, send it to the bank. So I request them to review it quickly so we understand that everything is in order. If there is something missing, we can attach it right now before we send it back to them in physical, because they need physical copies. It has to be wet signed. Physical copies has to reach them. Then they will revisit, they will go through everything, tick their boxes, and then the file progresses for settlement. Until they have reviewed and agreed that everything is okay. And we're not talking about this some random person. This is most likely is a paralegal or a lawyer reviewing those documents, making sure they are in order uh, from that perspective. And this is where it is a lot different for your mom and dad buying investment property, because then when you sign as an individual documents, it goes straight to the lender, their internal team review it, and end of the story. This is external third party paralegal lawyers involved reviewing your documents before uh, the team before the file actually the application actually progresses to settlement team.
No, I agree. I mean, there's a lot of signing. I know even you miss one place, then again, to and
Yeah,
fro will start happening. So again, you can't lose. I mean, and that's why like even 28 days feels like, oh, I've got 28 days, close to a month time,
no,
but actually it's not, because you have to, and of course you can't ask for more than that,
yeah.
especially in a kind of environment where we're buying properties, right? Can't ask for 3 months. So yeah, I think someone who's listening, just make sure that you have the good team around who knows what they're doing. They have done it a couple of times or multiple times, even better. And just work closely with them so that, yeah.
Mm,
Okay.
yeah. I mean, from there, I think it's easy enough. The settlement team doesn't necessarily do any verification. They are more about the funding of the booking the settlement on PEXA, making sure the funds are accessible, working with your solicitor, the other side solicitor, making sure that the three teams are on the same page and the settlement happens on the day. One of the things that you need to be aware is if settlement is due on, let's say 20th of March, you need to make sure the funds leave your bank account on 16th or 15th, you know. So it is with the solicitor well in advance to complete the transaction, because it can sometimes take a lot longer for funds to go into from self-managed for fund to a trust account for your solicitor's trust account in that sense.
Yeah. Yeah. Okay. Now, good, Amit. I think no, I think you have explained. Now, property is settled as usual. Property manager will manage the property,
Mm,
and again, all those rent and all will come into the that self-managed buffer account. What you have
mm.
now, all these costs are going out of the self-managed buffer fund. Is that right? The
Typically,
stamp
yes.
duty, the legal cost,
Correct,
everything.
correct, correct,
Yep.
correct. So because it's the self-managed super fund who's buying the property, even though it's been held in the Bear Trust function is only to hold the property, not to. Bear Trust will never ever do anything else other than holding the property. All the transactions would happen with self-managed super fund. The rent will go into self-managed super fund's bank account. The repayments will get out of there. Any expense in relation to property will go from there as well.
Now, what are the things like, say, after that, like, and you have to be extra cautious, right? Like making sure you're not using for any other purpose, or or like, so now from accounting perspective also, like, every year you have to do your tax return for your self-managed fund. So would you like to add on that as well, Amit?
Yeah. So look, I think whilst we have gone through the complexity of the whole thing, to keep things simple for the clients, I tell them two things to do. A, if you're not sure about anything, don't do it. Check with professionals. Right. B, if there is a penny spent out of that SMSF account, there has to be a supporting document attached to it. If you got those two things covered, you cannot go wrong. Right. Um, we have advanced softwares that purely manage self-managed super funds accounting. If you give us those two things, if you are disciplined enough about those two things, um, then rest everything will flow from there. If you have every document that we need to complete the accounting, bookkeeping, then accounting, then prepare the tax returns, get the audit done. Of course, self-managed super fund, you would be aware that every year you have to get an audit done before it can be, the tax returns can be lodged. If all the documents are covered and your transactions are clean, then from there it's a flow-on effect. So it's not a rocket science. You don't have to do anything big and fancy from there.
Yeah, I think the way we manage our own personal bank account, right? So now for self-management, you have another account, of course, all the expenses, whatever the rent income are coming is goes there. So it's pretty straightforward. But yeah, again, you need to know. Now, Amit, we talked about a lot of other costs. Now, for accounting perspective, every year, what is the kind of overhead we are looking, cost-wise to manage the self-managed fund?
Yeah. So we suggest allow another 3 to 4 grand every year to administer the fund. That could be, accountant fees, your auditor's fees, accounting softwares, bookkeeping, ASIC fee. All of those things come, ongoing. There. So allow 3 to 4 grand easy to get it done properly.
I think, thank you so much, Amit. Now, anything else you'd like to add to finish
I
this
think
off? I think you have.
Yeah, the only thing is, I think there is a lot of times people think they can do it themselves, run with it.
Mm.
Yeah, there's no stopping. If you search on whether that's setting up, whether that's lending, you can do all of that by yourself. There's no stopping. But uh, working with somebody who's done it like 10, 15, 20, 100 times, they have more possibility of dealing with the unknowns than you by yourself. The costs that you will incur in dealing with the unknown in terms of time and money can be quite expensive. And by any chance, if you become non compliant, the tax penalties are extremely heavy on those.
Yeah, no, I agree. I think, yeah, I agree with you. I think, personally, say if I have to, or anyone has to buy a property on their name, no problem. You can go and buy yourself,
Yeah,
have
yeah,
a solicitor. You can go directly to the bank. You can bypass the mortgage broker as well.
yeah,
But self-managed fund, no, don't. My recommendation is like, if you're listening to this, don't even think about doing yourself. It's not a space. You can do it by googling, but don't do it. Find a good mortgage broker, good accountant, financial planner. Do it properly. That way, you are, doing the, and not gonna pay a huge penalty or all those things.
yeah. And the thing is it's ongoing management of your strategy as well. It's not a one time transaction. You have done the transaction, that's fine. But this transaction probably is going to go on for 10, 15, 20 years. Um, and into your retirement. If you keep on changing the people you're working with, it's not gonna be fruitful, or you will get differing advice if somebody doesn't understand your circumstances completely.
Yeah, no, I agree with you. I think, yeah, it's like there's no point keep changing your team, especially in this space. Work with someone you can trust, you feel like a good partner, right? And then, yeah, just go so that they know, and then you're getting the right advice at the right time, and they are willing to work, because it's a bit of a lengthy process.
Yeah,
So it's
yeah,
not a last minute shopping. So Amit, thank you so much again. Now, what is the best way people can reach out? I know, I think there will be some links of your
yeah.
website and all.
I'll share some informative links from SAKDO, and share the bare trust structure as well, how it is, so you can put it out here. But that will have my details as well, or you can reach out to me directly via email, or you can go into my website. It's amitaggarwal.com.au, and call me on my number is 0432 Easy enough to remember. Give me a buzz if you have anything to discuss about your property journey in self-managed super fund in that sense.
Yeah, thank you so much, Amit. No, very informative, and I'm sure it will help a lot of people to move forward or take decisions on buying property under self-managed fund or not. So, thanks again, and you have an awesome day.
You too. Thanks, Sanjeev. Bye.
Thank you so much for tuning in today. Hope you enjoyed and learned something new from this episode. Please don't forget to review our podcast and tune in every Tuesday 8 a.m. Sydney time to listen to all our inspirational guests and learn from their property journey. In case you're looking for help with your property investment journey or building a property portfolio, please visit our website www.investorsdream.com.au to learn more about us and our services. And feel free to book a call from our website for a friendly chat. Have an awesome life and happy property investing.